Hi there, welcome to my channel. But before we proceed, I would like you to click on the subscribe button and also click on the notification bell, the like, and please don't forget to share. Okay, so our lesson for today is accounting for single proprietorship. So for example, Mr. C decided to put up a car rental business and invested 1 million cash to acquire a 14-seater van. The entry to record this transaction is you have to debit cash 1 million and then credit the capital account of Mr. C for 1 million. And then please don't forget to put your explanation, which in this case is to record 1 million cash investment of Mr. C. In this particular journal entry or in this particular example, the 1 million cash is no longer the personal money of Mr. C. The cash now becomes the asset of the business. Now, let us assume that Mr. C invested his own car with a market value of 500,000 pesos in the car rental business. The journal entry for that activity would be debit transportation equipment 500,000, credit the capital account of Mr. C for 500,000, and the explanation would be to record property investment made by the owner. The total asset of the business increased by 500,000 in the form of transportation equipment invested by the owner. The car ceased to be the personal property of the owner. Hindi niya na yun personal property. It now becomes the property of the business. The capital account of Mr. C increased by 500,000, representing the market value of the property invested, which is the car. Now, let us say the 1 million cash and car property investment of Mr. C can also be recorded in a compound entry. So, how are we going to do that? All you have to do is debit cash 1 million, debit transportation equipment for 500,000, and then credit the capital account of Mr. C for 1,500,000, which is the total of the 1 million cash and of the 500,000 worth of transportation equipment. For the explanation, you have to write to record investment made by Mr. C in the car rental business. Guys, this entry can be used if the investment in cash and in property was made on the same day. Now, let us assume that Mr. C utilized part of the 1 million cash to buy a van. So he bought a van with a cost of 800,000. The journal entry would be debit transportation equipment 800,000, credit cash 800,000, which is to record acquisition of van for 800,000. The total asset of the business remains to be at 1,500,000, broken down as cash 200,000, car 500,000, and the van amounting to 800,000. The decrease in cash by 800,000 was replaced by the acquisition of a new asset in the form of transportation equipment with the same cost, which is 800,000. Now guys, let us say that Mr. C needed 50,000 cash for his own personal use. So, Mr. C withdraw 50,000 cash from the business for his personal use. The entry for this would be debit drawings, Mr. C, 50,000, credit cash, 50,000, which is to record the 50,000 cash withdrawal of Mr. C. The asset of the business decreased by 50,000 pesos as a result of the cash withdrawn by the owner, who is Mr. C. Well, I think that's all for now. Thank you for watching, but please don't forget to click subscribe, click share, and click like. So, I would like to see you again in my next video. This is your mom, Dr. CPA. Thank you for watching.